This could be the single greatest time to invest in your entire life. You are not going to want to miss out on this. Now, there's been a lot of talk in the news lately about the Federal Reserve raising interest rates and whether they're going to cause a soft or a hard landing, and if the United States economy is going to go into recession.
Here's the issue. I do believe we go into recession. I don't believe there'll be a soft landing.
I'm not a financial expert, and I can't tell you for certain whether or not the economy will get into a recession, but if it does, you must be prepared because this could be the greatest time to invest your hard-earned money to make the most profit long term. Let's start off by defining what a recession actually is. The dictionary says that a recession is a period of temporary economic decline during which trade and industrial activities are reduced, generally identified by a fall in GDP in 2 successive quarters. Breaking that down into simpler terms, GDP, or gross domestic product, is just a measure of how well an economy is doing. The formal definition of recession is when GDP declines 2 quarters in a row, or in a 6-month time period, the GDP of a certain economy will fall in those 6 months. However, a recession can have lasting impacts on people's lives even after the formal definition of what a recession is already over and GDP starts growing again. A typical symptom of a recession is high unemployment, and unemployment can be persistent even after the economy starts to recover. This makes many people feel like a recession lasts much longer than it technically does. The average recession lasts about 10 months, but keep in mind that is just the average, so it could last much longer or it could last much shorter. Now that we've defined what a recession actually means, now we're gonna move into how a recession impacts the price of different assets, and this is how you're gonna build wealth. A recession is characterized by a slowing economy. A slowing economy means less profit for businesses. Less profit for businesses then means these businesses aren't able to afford to pay all the employees they had when the economy was doing good, so unemployment spikes. When more people are unemployed, that means there's less money for consumers to spend in all the different businesses. And then when consumers are spending less, that means less profit for businesses. And this is a cycle that continues and continues, making the recession worse and worse and worse. During this recession cycle, you'll see the price of assets fall because there's not enough money to go around. People need to sell their shares in companies and sell their investments to pay for their lifestyle to get through the recession. So you'll see an average decrease in the overall price of different assets. And that's all because these prices of assets are all based on an underlying supply and demand curve. Take, for example, if 100 people want to buy a share of Apple stock at $10 a share, and 50 people who own Apple stock want to sell it at $10 a share. After those first 50 transactions are made, the price of Apple stock will rise since there are no more sellers to keep up with the buyers that still want to buy that Apple share. So the price of the share will go up until more people are willing to sell to those buyers. As we discussed, during a recession, the economy isn't doing too great, making the money supply very tight. This makes a ton of people sell their assets in order to free up some extra cash, overall lowering the prices of those assets, making it a perfect buying opportunity. I always think of the quote by Baron Rothschild, which goes, "The best time to buy is when there's blood in the streets," which basically means when everybody's selling all of their assets, that's when you should be greedy and that's when you should start buying them. Now, recessions never last forever, and there's a very good reason for this. The government wants to see the economy doing well because a good economy means more money flowing around, which means they collect more in taxes. So they're gonna help the economy out in whatever way they can, whether that be through stimulus checks or unemployment benefits. They're gonna try to help stimulate this economy in order to get it back to where it should be. And the economy has always recovered from a recession in the past, and I'm gonna bet my money that it's gonna do it once again. Now let's move on to the good stuff. How am I gonna tackle this recession, and where should you put your money in order to make the best returns? Keep in mind, not a financial advisor. I'm just gonna tell you guys what I'm doing, and maybe you guys can draw some ideas from it. All right, let's get on into it. The biggest factor in making a lot of money in a recession is having cash waiting on the sidelines to invest at discounted prices. So whether you have cash sitting in a bank account waiting for you, or you have a job that you're not gonna lose during the recession, that you're able to bring some money on the side to invest, you're gonna need some way of having liquid cash in order to buy these assets. I also think a recession is a perfect time to start cutting back heavily on your daily expenses in order to save as much money as possible to get into the markets at this discounted rate. And then after the recession starts recovering and you've made all of this money, then you can go back to your normal lifestyle. Now that you have money set aside to invest, you have to be able to invest that money when prices are continuing to go down. You have to be able to stomach those red days in order to see those massive green days in the future. None of this is going to work if you sell all of your assets just like everybody else during the recession. That's not a way to build wealth. You have to be able to stay with it and stay the course so that you can make those gains. For my personal portfolio, I like a 3-tiered investing approach, going from less risky to more risky. This gives you a semi-diversified approach, reducing some of your risk, but also giving you enough risk to make those big returns in the future. Investment number 1 is going to be into long-dated treasuries. The 2 funds I'm going to recommend for this category is TLT, which is the 20+ year, just regular treasury ETF, pays out a nice 4% dividend, and then TMF, which is just the triple leverage version of that if you want that extra risk. Long-dated treasuries are perfect for this upcoming recession if it happens because the Federal Reserve has interest rates so high that it's not sustainable. So they have to lower interest rates at some point. The reason that's so good for these long-dated treasuries is that these treasuries have an inverse correlation with the federal fund rate. So as the Federal Reserve starts lowering that interest rate down, these bond prices are going to go up simultaneously. And especially now when the Federal Reserve has most likely hit their ceiling for these rate hikes and they're not going to go any higher, there's very, very little risk in buying these long-dated treasuries because of this inverse correlation. The next tier up's a little more risky, and this is going to be your standard S&P 500 index. For me, I'm going to do this with inside my Roth IRA, and I'm going to invest into the ETF VOOG, which is Vanguard's Growth S&P 500 index. And this is going to supply me just a little bit more risk, and then my returns hopefully will be a little bit bigger. How I'm going to invest in these S&P indexes is I'm going to dollar cost average into them. So I'm going to set a recurring schedule as the market is decreasing to slowly buy into these indexes and then just hold it for the long term. Now the third tier is some sort of risky investment. A recession is typically a period of high volatility, so a risky investment is either going to be your best performing asset or your worst performing asset. Now keep in mind, these gambling-like risk investments should be a very small percentage of your overall portfolio, and remember to only invest in these risky investments of what you can afford to lose, because there is a greater than 0 chance that your investments lose a lot of money. With that being said, investing in very risky assets at the bottom of bear markets can provide you with the greatest returns that you'll ever see in your life. Just imagine buying Bitcoin at the bottom of the 2018 bear market. You'd be up over 1,100% by now. So whether you like crypto or you want to invest in some risky individual stocks or you want to experiment with options, I recommend doing that, but only with a very small portion of your overall portfolio. Do not get carried away trying to become a millionaire overnight. It's not a smart idea. I think this 3-tiered investing approach for recessions is perfect if the US economy goes into a recession sometime in the next 6 months. And for those of you who want to know my exact portfolio for this upcoming recession, here's what it is. For my tier 3 risky investment, I have my $50,000 to $60,000 in Ethereum that I have staked over at Coinbase, which I've had for years now. And I'm just going to continue holding that because I'm earning that 3% yield on my Ethereum within the Coinbase app. So I'm going to hold that for the long term and not add on anymore. Moving on to tier 2, I'm currently stockpiling that $7,000 to put into my Roth IRA for the 2024 year. And then I'm going to be dollar cost averaging into VOOG over the coming couple months starting in January of 2024. And then for my tier 1 play, I currently have about $17,000 split 50-50 between TLT and TMF, trying to get that 2x leverage on the 20+ year treasury funds, and I think that's a decent play for where I'm at right now. So if the economy goes into recession sometime in the next 6 months, this portfolio will perform very, very well. And if the economy does not go into a recession and we get that soft landing that everybody's hoping for, this portfolio will still perform well. So it's geared for both whether or not we hit a recession or we don't hit a recession, you're still gonna be covered either way. Now that's gonna do it for this video. I hope you guys enjoyed. If you could, do the stuff that's on the screen right now. I really appreciate you guys taking the time to watch this video. I hope you learned a thing or two, and I'll catch you guys in the next one. Peace out.